this video, I want to show you some journal entries and ledger entries for job order costing. Here we have a journal on the left and the relevant T accounts on the right. I want to talk to you about these 4 inventory accounts that you'll find in a manufacturing environment. Let's go through each one of these. Remember that every T account is a formula, and I want to talk about the main numbers that go through these T accounts and what they would be called so that you could be prepared to do word problems in an accounting class. Think of the top 3 T accounts as 3 distinct and separate areas in a factory. They could be all under one roof, but they are 3 distinct areas. The raw materials area, and number 2, the work in process area. Think of that as where the action is happening. Laborers are actually touching the product that is being produced. And then when the product is finished, it is transferred to a 3rd area called finished goods inventory. Now, hopefully, the units do not stay long in finished goods inventory area. The 4th T account is an overhead account, and this is where we pool the insignificant costs in our process. So we have direct and indirect costs. A direct cost is a cost that is easily traceable to a product, and an indirect cost is not easily traceable to any one product. The example I use is the cost of a windshield, for example, in producing automobiles. Well, the cost of a windshield can be directly traced to the exact car or truck that has that windshield. Whereas the use of a rag or the use of Windex or a paper towel or toilet paper in the bathroom, these costs are indirect because they're not easily traceable to anything that we're producing in the factory. Let's look at the raw materials inventory account. Since all of these are inventory accounts, the beginning balance will be on the debit side. And the most common reason to debit the raw materials inventory account is when we purchase raw materials. So we debit raw materials and we credit cash or accounts payable. The people in the work area will requisition materials whenever they need them. And there's 2 types of materials. Direct materials, those things that we account for very carefully, and indirect materials. When direct materials are requisitioned, we just have to debit work in process and credit raw materials inventory. Every time the raw materials or the finished goods, every time they move position, there has to be a journal entry showing that they moved from one of these 3 locations to the other. So when indirect materials are requisitioned, they'll also come out of the raw materials warehouse or area, but they will just be debited to factory overhead where they will be pooled with many other indirect costs, and later they will just be assigned to the work in process. Okay, next, let's talk about the direct labor. I don't have a T account here for labor, but when we pay direct labor, we will debit work in process. What is direct labor? Well, in the textbook world, we will say that direct labor is always wage labor, and these are the people that are touching the product. Now, in the real world, they could be wage or salary, but just to simplify, we call them wages in the textbook world just to emphasize that they are variable instead of fixed costs. When we finish a job, we will have direct materials and direct labor accounted for very carefully. And then the last thing we'll do is just assign some of this general factory overhead. And so we'll debit work in process and credit factory overhead. I just want to point out that this is a problem area because this is the one number of the 3 product costs that is the most misunderstood and could lead to distortions of costs. In other words, we might think something costs more or less than it really does because we don't fully know the overhead number. If we want to improve our knowledge, we have to zero in on the overhead and get better data there. Okay, the next one, when we finish actually producing something, we're going to transfer it out of this work in process area and send it to the finished goods area by debiting an account called cost of goods manufactured, and we will credit work in process inventory. Now, when we sell something, we will do just like we did in first semester. We'll debit accounts receivable and credit sales, and we'll debit cost of goods sold and credit finished goods inventory. Now let's look at the factory overhead account. Every time the bills come in that relate to the factory, we'll debit factory overhead. For example, the electricity bill in the factory, we would debit factory overhead hyphen electricity. Or water, we would debit factory overhead hyphen water, or something like that. Whenever we finish a job, we will apply some of this overhead to the job that we just finished by debiting work in process and crediting factory overhead. Now, if we've been doing this right, at the end of the year, we won't have a significant balance in factory overhead. And if we do have a little balance, we'll just send it to cost of goods sold and pretend it never happened. A couple other journal entries that students often miss is depreciation. In first semester, when we learned depreciation, we debited depreciation expense and credited accumulated depreciation. And that is still valid for a period cost. But any depreciation in the factory has to be debited to the factory overhead and credited to accumulated depreciation.